Welcome back to The Few. My name is Alex. This is my co-host Jess. And today we're going to talk about taxes. Yes, lovely, lovely taxes. One of those things that are unavoidable in life and, it could be a little bit overwhelming or mysterious. So we're going to break that down today and come up with some year-end tax strategies. How does that sound, Jess?
It sounds great to me.
All right.
Yeah.
Well, let's get started. I'll start with a little quick story before we begin here. I remember when I first got my paycheck, I think I was 17, 16. I don't remember, but I was looking through it. I was like, what are all these line items here? FICA, FUTA, SUI. I didn't know what the heck it was. It might as well have been a different language. So
Yeah. Who are you paying and why?
yeah. I didn't authorize this. Why are they taking this money out of my paycheck? I think what did I get? Maybe like my $200 paycheck became $80 when everything was said and done. Who knows? But it was definitely eye-opening for me. I don't think anyone really expects that when they're younger. No one actually taught them tax code or what all any of this stuff is. So it was helpful in a way because after that I think that might have prompted me to say, I want to study and learn about taxes. Most people don't want to do that. So I did start doing some of that in college and taking accounting classes just to get an idea of what that was. But today we're going to break down some practical strategies to help us to keep more of that hard-earned money and help maximize some of the tax advantage accounts that you have or you're preparing for your taxes. And it's very important that before the year end, just to kind of think about what it is you're able to take advantage of. Some things you can wait and do before your tax deadline the next year, but there's some stuff that it makes sense to be able to do it before December
Yeah,
31st,
for sure.
or else you've kind of lost out on that opportunity. So let's talk about that in this conversation with some actionable tips to help you take control of your taxes.
Love it. Yeah, I can't remember my experience with taxes other than being frustrated with it. I love that little video that floats around on social media about the family that's playing Monopoly,
Yeah, yeah.
and he gets around to the kid and he's just sitting there with his little, Monopoly money in hand sobbing, and somebody asks him what's wrong, and his only response is taxes,
Yeah.
you know.
Darn
It's
taxes.
one I send to my mom quite frequently because she is in the tax business as well. And I taxes are really a mystery for people. And even what should I be paying? How much taxes should be
Right.
taken out? For my 16-year-old, we had calculated that she probably wasn't going to make enough this year to need to pay any taxes on her paycheck. And then she was so confused when that first paycheck came around. She was like, "Mom, they still took out taxes."
Yeah,
So
yeah.
there's so many different kinds of taxes. It gets really confusing, and that confusion gets really overwhelming for people. Maybe just break down a little bit about the mystery behind taxes, some of the different types of taxes and the system. Why is it so hard to understand?
Yeah, the system is definitely very complex. I forgot what it was, but someone said, I don't know, we have like thousands of pages of tax code
Right.
and a lot more complicated than anything else. And this is just a pile-on over years
Right.
of the IRS rules and just additions and so forth. I wish it was a lot simpler, but it's not, unfortunately. And it's very intimidating for people, obviously, because they're like, I don't know what to do with this. Now, we do have
Nobody takes a tax class in high school.
yeah,
Right.
yeah.
Yeah.
I don't even know if they offer it in high
It,
school.
it-
It was the first, it was one of the first classes I took when I started college. I did do accounting classes, but again, I did that because A, I wanted to learn, but B, I thought I was going to be an accountant. So I'm like, I need to get some of these classes and knock it out. I was probably the only one in the class that was actually enjoying this stuff. Everyone else looked like they wanted to fall asleep. But yeah, definitely it's very intimidating. There's a lot of jargon, a lot of things, and it's boring as hell too. So people are like, what the heck am I going to do with this? But it's interesting. You mentioned your daughter. I was just thinking about the fact that even when you start and you get your paycheck, like no one's teaching you about deductions. No one's teaching you about withholdings. They give you a little thing and say, okay, fill this out. And people put a number there and half the time they probably have no idea what they're putting in there on their little worksheet. But I think that's important just to kind of learn about some of that stuff. And as I mentioned early on in life, I kind of took a liking to it, so I wanted to educate myself. But this day and age, people are going to do that. It's more, I think, more something just to avoid. It's hard. I don't want to deal with it. It's complicated. Either I'm going to use some software, or I'm going to use an accountant or a CPA to help me understand some of that, which is great. Those are things that you need to do. But I think it's important that you understand what the tax strategies are and how that could help you in unlocking to keep more of your money. And that's what I'm hoping that this conversation will help with.
Exactly. Yeah. The important thing about getting past that feeling of avoidance is so that you can take action on some of these things that are within your control.
Right.
Once you do understand them,
Right.
that can truthfully help you have more ownership over those decisions.
Mhm.
Paying taxes via your paycheck or paying taxes when taxes are
Mhm.
due. Like whenever you understand that you do have choices
Right.
that you can make,
And
that does help.
traditionally, even with a lot of women that we've seen, they've told us, for example, they went through a divorce. They're like, I never handled the taxes, you know? So this was something that was handled by my ex. Or if they survived their spouse and they're like, this was not something I ever handled myself. It was, I gave them my W-2 or whatever it was and
Right.
some items, and it was handled by my spouse who's passed. So whether it be that, or if you're a younger woman, an executive, someone that's kind of going up to corporate ranks, or you have your own business, small business owners, it's very complicated, very
Yeah.
intimidating. So it's easy for us to kind of help break that stuff down for them.
Yeah, and really important. I know something that's top of mind for folks right now is federal policy.
Yeah.
And with the election that just occurred, there's going to be some changes that we anticipate happening. How does the tax policy aff- shape maybe some of the decisions that you might make around your money?
You're right.
And what are some of the influences that our president has or does not have over that tax policy?
Well, I guess it depends on the president. So some of them kind of overstep at times. But that being said, this is not a political conversation. It's important to understand what policy is and how that gets shaped. The IRS comes out with the new rules and so forth. But whether it be through legislation, Congress, and so forth, kind of changing and shaping some of those things, there's also different policies or things out there that will sunset possibly, right? So estate planning wise or tax planning wise,
We
things to
have one
know.
of those coming up next year.
Correct,
Yep.
correct.
Mhm.
So that was one of the conversations that people were having in regards to, depending on who takes office, who becomes elected president, will that sunset, or will they try to make it stay for a longer time frame or make it permanent possibly? So all those things that we need to keep in mind, and that's one of the things that we do for our clients,
Right,
obviously,
exactly.
keeping all of that. But things to know for this year before 2024 is over. Your current capital gains rates, your max 20%, those may rise possibly next year. That was one of the things that people were concerned about.
Right.
But if it doesn't rise, then you might not have to worry about possibly taking some of those gains this year, just concerned that it would be higher next year. But that's one of the things that we talk to clients about, looking at tax harvesting. So it doesn't necessarily have to be gains, but it could also be losses. If you have losses in your portfolio, depending on how you invested, maybe you bought some meme stocks or something and you want to take that loss, you can use that to offset another gain and just lower the impact on your tax return. So things of that nature, also depending on where you sell those assets, depending on the types of accounts. So sometimes I think a big confusion can be, if I sell this inside of an IRA, is it going to be taxable? No, it won't be taxable, but when you take the distribution, then it becomes considered as income, at least from a traditional IRA. So figuring all that stuff out will be helpful. And then once we get a better idea in 2025 what those tax policies will be.
In brackets.
Yeah, and brackets. So the brackets, I think, have been already revealed by the IRS. So what that's going to look like, taking that into consideration. So if you can maybe take up to a certain bracket for income, or if you need to take a distribution at the end of the year from a retirement account, we can help in working about that. But I think right now the main thing for the tax policy is just we don't know what capital gains rates will look like. We don't know if some of this stuff is going to sunset. Chances are it won't. But talking to a professional, again, talk to a tax professional or financial professional, and figuring out if there's anything you could take advantage of before the year is over.
Yeah. Again, just getting past that frozenness, getting past that fear, getting past that uncertainty, and taking action on what you can do. And sometimes what you can do is just to meet with a professional, right? To find that trusted person and to say, I'm not sure what I need to do. Is it possible that you could help? And sometimes that is that action step that people need to be taking. You touched on it. There are different types of accounts that people have with regards to savings. And one of those is those tax deferred account. And that means that you're not paying taxes on the money that you're putting into those accounts, so that when you do take the money out of those accounts later on, you have to take taxes then.
Right.
And this creates a decision point for people with regards to their savings. A lot of these tax deferred accounts it's money that you're setting aside for retirement. How can people maximize this opportunity to defer money for retirement and not pay taxes on it now? What does that mean, and how can people use that to their advantage?
Yeah, you can totally reduce your taxable income now and then take advantage of that and have that grow tax deferred. So
that can help with the brackets, right?
Correct.
Yep.
So I think we need to take a step back for a second. So the tax deferral means that any growth you're having inside of the account is not being taxed. Certain types of accounts will allow you to take a deduction, such as 401ks, traditional IRAs, and so forth. So we see this a lot with our clients that are, making contributions through their paycheck at their retirement plan at work. And then other plans like a Roth IRA, you don't get that deduction, but the money will grow tax deferred still, and you can pull it out tax free. Which a traditional IRA and 403b or 401k, a lot of those other retirement plans where you get the deduction, the IRS is waiting for you to take the money out so they could finally tax
they're going to get paid one way or the other.
Yeah, one way or another, they're going to get that. So I think it's important to understand that. And then there's other things such as HSAs, which offer triple tax benefits. You can get tax-free contributions. You can get growth on that, and withdrawals for medical expenses. So that's something that
HSA stands for
health savings accounts.
Yep, pretty straightforward.
Yeah. So, and people don't take advantage of that. That's something that if you want to make a contribution before year end, you could definitely do that. And
it's linked to, because right now we are currently in between now and the end of the year, open enrollment for
correct.
So if you have an employer provided plan, this is now a time where you could make changes to it without having to have another life circumstance like having a baby or something. So you could go to your employer and look at the different options that are available to you and make a change. If you move into what's called a high deductible healthcare plan, then a lot of times you'll have access now to this HSA, this health savings account that does provide you with the ability to save for health. But if you weren't to use it, that money continues to grow and you can use it.
And I know we're talking about tax strategies, but I think this kind of dovetails into the conversation because this is what I've done personally for our family. We have a higher deductible plan for health insurance because insurance premiums have gone just crazy. But we provide for that with the emergency fund or something else, or the HSA where we have the funds ready in regards to that. So I think that's better long-term benefit instead of just paying all these insurance premiums to the insurance companies. Yep. So one other thing to think about is the after-tax contributions, if those are available through your employer. If you've maxed out your retirement plan already, you can say, well, I've already put everything. Some plans will allow you to make after-tax contributions on those that can also continue to grow tax deferred.
And, we'll throw it in there while we're talking about it is if you don't already know what your employer contributes to those accounts,
Right.
it's something to look into and to consider as well. My husband's employer puts $1,000 a year into the HSA for us. So that's an
Well, that's
additional
nice.
benefit
Yeah.
that we get through that HSA that we wouldn't otherwise get. A little bonus
Yeah.
to his income. And, the match that they provide in some cases to the contribution that you're making to a tax deferred account, they can't match Roth contributions. But if you were able to make Roth contributions, they still match with their before tax
Oh, nice.
contribution. So there's a lot of different, again, sometimes the best way through is just to find someone you trust.
Yeah.
And I
And
think,
I think that's important
yeah.
just to kind of harp on that, because one of the things that I usually want to look at is client's benefit package, just to get an idea of what they're eligible for. Many times they don't even realize that they were eligible for certain things, benefits, or that they could take advantage of certain things, because no one's really talking about it. They get this manual or a package and they're already overwhelmed starting a new job and so forth. So if you are working with an advisor or a tax professional, give them that manual or the guide just so they can kind of get an idea of what are the benefits you have access to and to see if you're taking advantage of all of them.
Yeah, that's such a great idea. It's such a great tip. It's very helpful, I know, on my side of the conversation to understand what that individual situation looks like. With regards to this kind of thing, again, taxes can be very confusing. I think once you get past that confusion, you get past that feeling of, I don't know where to start. There are some really simple actions that people can take
Right.
that will provide them with some tax benefits. So what are some of those what's top of mind for you? What do you think of that are simple action steps that people can take?
We highlighted a couple of them. So taking advantage of the tax advantage accounts, making contributions into 401ks, HSAs, IRAs. And if you're able to increase them, definitely do that. That's one of the things that I realized early on. You got to remember, again, going back to how old I am or how long I've been in this business, when IRAs max out at $2,000 a year,
Oh,
right?
you are old.
Yeah, I am old. Sorry.
Okay.
That's when I started in 97. That's what it was. So I've seen people back then who would say, okay, I'm going to put in $200 a month or less than that. It was 166, I think was the number, 167 a month. And then they never changed it, even though they were eligible to make
To make
higher
higher
contributions, but they put that in on a monthly basis and they just forgot about it years later. So keeping up with those numbers to see what you can do and increasing it, just like we see increase in cost of living, kind of put that cost of living type of increase in your savings as well. So that's a great strategy right there. Find out what you're eligible for tax credit wise or deductions, whether it be childcare, education, other things. Again, working with a professional is very important
I was
on
going to say
this.
one caveat to this. I think a lot of people may feel like they can rely on the software programs that are out there to review and ensure that they've checked all the boxes for all of their tax credits and deductions. My experience has been, and then the conversations I've had with my mom, who again is a tax professional, they don't always catch
Right.
everything that you're able to claim and deduct.
And since you and I are seeing a little bit closer as far as transactions of what's going on, where the expenses are, that's one of the other things that I've caught a lot of mistakes happening where they've had health issues or other medical expenses and things, and then they never told the accountant all of those line items. So that's one of the things with the software that we utilize. It's helpful to be able to track some of that and see, and then based on how much that is, that could actually be deductible for you on your taxes.
Yeah.
Again, we don't necessarily give tax advice in that regards, but there's a lot of tax strategies that we can help you
Absolutely.
and help also point certain things out to your other professionals that maybe they didn't know about or they didn't ask the right questions to get that.
Yeah. Well, taxes too have this kind of dual approach. One is, what do I owe based on what happened last year?
Right.
But then there's that second approach that I think, again, a financial advisor typically has a strength in, which is, how can I plan?
Right.
And so
Right.
we can't calculate as financial advisors unless we also have
Correct.
CPA license. We can't calculate what you owe the government for you. We can't give you advice on that aspect of it. What we can, a lot of times, look at your situation, look down into your transactions and
Mhm.
your life and what's going on, and give you advice on how to prepare for the future better.
And one of the things that you and I have done is taking clients' tax returns, running that through our software, see if there's anything else that could possibly pop up.
Absolutely.
We can also be able to note, as you said, well, I can't help you for the year prior, but what I see are some red flags, and these are the things we could plan for going forward. So
That's right.
maybe there's a lot of dividend income or other things, and maybe we could figure out a way of sheltering that.
Yep.
Or as I just said, maybe expenses that weren't taken or deductions that were possibly missed just moving forward. It's helpful to be able to share that information. And then in this day and age, with a lot of the software that we utilize, it helps bring up a lot of red flags or other things that could be concerning and start the dialogue.
Yeah. What are maybe some of the misconceptions that people have about tax planning as it is? So looking into the future and seeing how maybe a financial advisor can help you better navigate taxes going forward.
Yeah, so one of the main myths and things that we'll hear a lot is, oh, I'm not wealthy enough. This is not going to matter for me. You know, tax planning is for the wealthy or ultra wealthy. And that's just not true. Everyone can benefit from doing some tax planning. It doesn't have to be anything major, but at the
Right.
end of the day, if we can help save you thousands of dollars, you know, that money could be allocated elsewhere, whether it be for your nest egg, whether it be for one of your dream goals or buying a property or whatever it is, or to plan on giving to your grandkids, whatever it may be, right? That money could be earmarked for other stuff. So we have to have that kind of shifting mindset. A lot of people unfortunately think that tax planning, they're like, oh, I don't want to cheat the system. I don't want to get an IRS audit. No, that's not what we're talking about. We're talking about taking advantage and utilizing the guidelines and the stuff that are given to us by the IRS and making sure that we're not paying more taxes than we actually have to. So you can
Right.
keep more of your money.
Yeah, being wise, thoughtful, and more on the offense instead of the defense,
Yeah,
right?
exactly.
With your
Exactly. Because a lot
taxes.
of times people are playing defense and it's hard, as you said, when you're playing defense for the year prior, it's sometimes too late.
Yeah.
So we got to plan and play offense for this year as well as the years coming ahead.
Well, one thing I want to make sure that we point out is that you created a guide,
Yep.
right? There is a guide that'll be available. You can go download it from joinfew.com, and that will give you not only a review of some of the things we mentioned here today, but additional ideas, strategies, things to consider that will hopefully give you some benefits with regards to taxes. But if not now, then as your income starts to grow, as your life starts, continues to develop, any of these other opportunities that become available to you, you'll already know about them ahead of time, and it will reduce some of the confusion and put more money back into your pocket, we hope.
Yeah, make sure you download the guide. There's a lot of other great tax savings in there. Talk about mega backdoor Roths, as well as other things that you could do today to take advantage before it's too late for the year.
Absolutely. Thanks for joining us today.
Thank you.